We're going to spend some time going over some of the Form 1040 scenarios and just highlighting some different important information relating to the Form 1040 that you have encountered or will encounter as you proceed through these different scenarios. So the first thing we want to look at, we're just kind of going to go in order through the different lines and different scenarios that I've got posted for you. Is line one. Line one is wages, salaries, and tips, and that is going to be from any job that has provided the individual with a W 2. Um, in these scenarios, I just provide you with the information without attaching a W 2. Every employer is required by law to give you a W 2. It's a summary of all of your earnings, your wages, and it tells you how much in taxes you've had taken out of the payments. So if we were to look at Bob Jones here, you can see that he earned $21,000 as a green screw worker, and then he also made an additional $8,000 somewhere else. So on line one, whatever the scenario, whether it is a single individual or if you are married filing jointly, you're going to combine all wages, salary, and tips on that line one. So in Bob Jones's case, it is going to be that 21,000 and that 8,000 to come to $29,000. As we continue on through and we were to look at Bob's return here, you can see we were going to skip down to line 6. And so lines 2, 2B, 3B, 4B, and 5B, just going to mention those real quickly. They don't play a role with Bob, but they might later on with some of the other scenarios. Taxable interest is interest that you would earn on any sort of certificate of deposit or savings account or a checking account. It is a taxable form of income, and your bank would provide you with that information in a Form 1099. But in this case, Bob has not received any taxable interest. Dividends are paid out from stock holdings. Different corporations pay stockholders a dividend if they choose to. It's usually a small amount, like a percentage or 25 cents or a dollar for every 3 months that they hold on to stock. It's an incentive to keep them as stockholders and also to try to get stockholders to purchase additional stock in that corporation. But Bob has not received any dividends. IRAs, pensions, and annuities, those would come from any retirement payouts that he may have received, and Social Security as well. If anybody has received any Social Security payouts, that would go on line 5B and 4B, 4B being the IRAs and pensions and annuities. So Bob is still working. He has not received any of these. He has not received any interest or anything. So that's why we're skipping straight down to line 6. And you can see line 6 just says total income. So add lines 1 through 5, and it's going to be the exact same as line 1 because we're not adding any additional income. So line 6 is also going to be $29,000 for Bob Jones. As we head back up to line 7, this is going to be our adjusted gross income. I'm not providing you guys with any adjustments to income. So that's pretty much just always going to be the same number on line 6. And then line 7, or I'm sorry, yeah, it will be the same as line 6. So 7 is also going to be $29,000 for Bob. And then line 8 is where we're going to pay attention to his filing status. So he is single and he is going to claim the standard deduction. And that's when we go to the chart on line 8. He's single, so we're going to put $12,000 on that line. In a different scenario, I think I have a couple that is married and filing jointly, so they're going to be $24,000. And then I think I have another scenario where it states that the individual is the head of household, which could just mean they are single, but do have children, and so they have an increased deduction as opposed to just the single deduction. They are going to get $18,000. But in this case, for Bob, he's single, he is not married, and so he's going to have $12,000 there on line 8. We head up, we're going to take a look at what line 10 says and maybe take a gander at 11 as well. 10 is going to be the taxable income. And so it's just saying subtract lines 8 and 9 from line 7. We do not have any sort of business income deduction on line 9, so that's blank, which is why there's no space for it down below. And so with nothing on 9, line 8 from line 7. Line 8 from line 7. So Line 7 was that $29,000. Line 8 is going to be the standard deduction. And so, if I wanted to bring up my calculator, going with the $29,000 that I had on line 7, minus the $12,000 on line 8, which tells us Bob's taxable income is going to be $17,000. We're going to use the amount from line 10 in our tax tables. That's what we're going to look up, and we need to make sure that we're looking in the single column because that is how Bob is filing. So line 11 is when I go to my tax tables and I'm using the amount from line 10. So I'm going to pull up my tax tables and look at $17,000. Remember your column headings here, the at least and but less than. Since Bob made $17,000, I cannot have 17,000 in this right-hand column. It's going to have to be on the left-hand side because it's at least 17,000, but not less than 17,000. He is also single, so I'm going to be looking at this first column. If it is married, filing jointly, I'd be in the second column. Head of household would be all the way over to the right. So let's scroll down. Okay, so I cannot do 1695 to 17 because 17 is not less than 17,000. So I've got to go to the next one. At least 17,000, but less than 17,050. Single. So $1,849 is going to be the tax liability for Bob. I do not state anything with Bob about a child tax credit later on in one of them. I do mention that they are receiving a child tax credit, but Bob is not. He has no children, so it's going to be blank. So then on line 13, I would just do line 11 minus line 12 to get line 13. So line 11, 1849 minus 0 is also 1849. And back up to line 15, I'm just going to add lines 13 and 14. There are no other taxes, right? So I'm going to take my number from line 13 and carry it down. Go. Line 16 is how much Bob had taken out in taxes in the last year. And this would be taken from the W-2 and the 1099. When you did virtual business, you actually got to look at both of these documents and see if there were taxes withheld. In these scenarios, I'm telling you, in each case, how much they had withheld in taxes. So Bob had $1,600 withheld in federal taxes. That's what I'm going to put on line 16, $1,600. Nothing is mentioned about refundable credits, so that line will be blank. So line 16 plus 0 is going to be the same number I had on line 16, which was 1,600. I'm going to look at line 19, and I know right away because I am giving it away with the lines I had right here. Line 19 is going to be blank, and I'll be skipping down to line 22. But in the other scenarios, you probably will have numbers on line 19, because what line 19 states is this relationship between line 18 and 15. If line 18 is more than line 15, then you're going to subtract line 15 from 18. What this line is telling us is if we were overtaxed over the course of the year. So if the taxes withheld were greater than the number you looked up in the tax table, then that person would be entitled to a refund. They overpaid. But in Bob's case, I'm skipping down to line 22 because line 15 is greater than line 18, right? So if I were to look at line 15, I had $1,849. That's how much in taxes Bob actually owes. But over the course of the year, he only paid $1,600. So maybe it's the fact he claimed himself as an exemption. He was actually undertaxed over the course of the year. So the difference between line 15 and 18 is how much Bob's going to have to write a check for to the IRS. So I'm going to go 1,849 minus 1,600. So I'm taking what he should pay versus what he did pay. And I'm seeing that Bob's going to have to write a check for $249 because he was actually undertaxed over the course of the year. So he owes money to the IRS. As we look at some of the other scenarios, you can see in the second scenario for Rick James, some additional information I put in here is that Rick owns stock in Google, and so he was paid $300 in dividends, right? Google paid him a dollar amount to kind of persuade him to hold on to their stock and then reinvest that back into the company. And so dividends goes right there on line 3B. Sarah and Scott Lewis are married in scenario 3, and they're filing jointly. So a couple of things to consider here is we need to combine both of their income on line 1, right? Since they're jointly, they're combining everything onto one Form 1040. So we'd have to add both of their incomes on line 1. And then for their deductions over here, the standard deduction, we want to make sure that we select that married filing jointly. So they're going to have a greater standard deduction of $24,000 as opposed to if they were just single. Additionally, they had a savings account that earned $800 in taxable interest. So if I head back up, you'll see taxable interest would be going on line 2B.